so noisy during your weather forecast. On the Money Watch, people are breathing a sigh of relief now the tax deadline has passed. But the words IRS Audit are enough to strike fear into the hearts of many people. So what do you need to know? We're talking about it this morning with Certified Financial Planner Bert. And Joe says there's a lot of myths out there when it comes to audit. So we're going to bust the myths today, right?
It's a 5-letter word that most people fear. They'd rather have a root canal than an IRS audit. But
I am with you.
Have you ever been audited?
No, but that's one of my fears. I'm always like, once I click submit, I'm like, this isn't really over yet. You get scared.
Well, I understand, because you know the tax law is so complicated, and people are afraid that they made the wrong thing, and then the IRS comes knocking and wants explanation.
And ignorance of the law does not excuse you, right?
And you're guilty until you're prove yourself innocent with the IRS.
True. That's sad. All right, so first up, people should be afraid.
Well, only about 1% of tax returns are audited. But if you're doing shady things, yeah, you have every right to be afraid. But really, there's only a 1% chance that you will get audited. So it's not that big a risk.
Okay. Next up, people think that because they had their taxes filed professionally, that they're audit proof.
Not necessarily. In fact, a lot of these tax preparers, oftentimes these low-income neighborhoods where they claim they're going to get you extra money back by claiming extra dependents or splitting your tax return between you and your spouse, so on and so forth, those people get put on a hit list, on a watch list. And so if they continuously do that, the IRS is going to pull all those tax returns, and if you've gone to one of those preparers, you're at a higher risk.
Gotcha.
Yep.
Myth number 3, those with low to moderate incomes don't get audited.
Not necessarily so. In fact, the IRS now is looking for money in every nook and cranny that they can get, and the IRS has hired tens of thousands of more auditors out there to find this revenue. However, the bigger target is the higher income folks, but just because you're low to moderate income does not mean that you won't have an audit. And there's two kinds of audit. One is the correspondence audit, where you get the letter in the mail, and they really want clarification. Did you earn this? Did you make a mistake here? They want clarification. Those aren't so bad. Answer it quickly, get it done. The worst audit is the face-to-face audit.
Oh, no. Yeah. Okay. Next, filing for certain deductions or credits increases the chances of an audit.
Now, that's an old wives' tale. If you're entitled to take the tax deduction for child care credit, for taking credits for things or deductions that you've given for charity and so on and so forth, if they are legitimate credits, legitimate deductions, don't be fearful of taking them. It's when you're taking them and you're not entitled to them that you maybe have some sleepless nights.
I saw a lady on a show recently. She was taking them for manicures, her hair, her facials. She said it was part of her job of being beautiful.
I've heard that before.
Right? Okay, and finally, audits are done immediately.
No, they're not. Usually it takes a couple, 3 years for that audit to work through the system. So if you filed your tax on April 15th and you feel, well, if I haven't heard by April 16th or the 20th or May 1st, I'm okay. No, it's usually a couple years before they get around to auditing you.
Oh, no.
Yeah.
All right. Bert, happy Easter.
Same to you.
Thanks for coming in.